Hey everyone, happy Thursday, January 18th. It's about 10:30 on the West Coast, and it's time for another market update. Not the best week this week. We've had a nice run, really since October, getting rates down from, above 8% down to about 6.6, I think the lowest as they got. But this week we got some news that didn't really go in our favor, so let's take a closer look at that. First, going back to last week, we actually got some good news. The December producer price index inflation came in at, for the headline, came in at negative 0.1%, which is only at 1% year over year. That beat estimates. The core was flat, and then the year over year dropped to 1.8%. So that's all good news for us. Looking at in graph form, you can see, we're kind of at levels pre-pandemic, kind of where we're at. Obviously, during the pandemic, things just escalated, jumped really high as the cost to ship, the cost to get us goods, all that kind of produce goods, all went sky high, and that obviously affected us. So this coming down is good for future consumer inflation, especially the PCE, which is coming up in about a week or so. That one has a component that looks at this pretty closely. So hopefully, that plays in our favor. Next thing we got was builder news. So we got December starts and permits. This is always important to take a look at because this is basically where we get, future supply from. So starts, we're really up last month, down overall, down in single family this month in December, but you can still up pretty good year over year. Starts overall up 7.6%, including multifamily, single family up 15.8% year over year. Permits were slightly up, a little bit, about 2% up, which is good because, again, that's where we kind of seen our future demand or our future supply. The first thing builders are going to do is pull permits before they build. That's running at altogether about 1.5 million, it looks like. About 1 million of those are single family, and that's a big jump, 32.9% year over year. And then completions had a nice jump, so more housing coming on the market. The more housing, the better as far as people looking to buy housing, but we also want to make sure we don't, what happened in the housing recession where we had too much housing, too many, open units available. So, but on that line of thinking, household formations, which is a pretty good look at future demands. How many people are going to move out and need new places to live, whether it's an apartment, a house, and so forth. That's running about 1.9 million annually, and as we see, permits are at 1.5. So we're still, about 400,000 deficit we're doing right now. So that bodes well in the whole. We don't want to be oversaturated. Not a bad idea to get a little bit more inventory, but it looks like we won't be oversaturated anytime soon. Next thing we got, December retail sales. So it jumped 0.6%. I think the estimate was 0.4%. And then core was supposed to come in at about 0.2%. That came in at plus 0.8%. So this is one of the bad things that happened this week for us. Here in graph form, we can see Americans just keep spending money as time goes on, and more and more and more. So, the interesting thing with this one is how much was this on credit? How much was irresponsible spending in the month of December for Christmas and things like that and holidays? So, we know the savings rate is really low in this country. Not a lot of Americans have money saved, and we know that credit card usage has gone up and up and up. So it'll be interesting to see when we see those credit card data to see how much of this was people just basically running up more debt, which is not a good thing for them overall in the long run. Next thing we got, CoreLogic November rent was up 2.7%. Previously, it's at 2.5%. That is the first increase since May of 2022. So again, a very small increase. And as we can see in graph form, we're basically kind of back again where we were pre-pandemic. You draw a straight line. But the important thing to see here is we know that thing is kind of lagging behind. We know there's a big lag in this reporting where, CoreLogic's been coming down for quite a while. Now it's ticking up a little bit, but the shelter that CPI and these inflation reports PCE use, that's still just coming down. So we still have, even this uptick won't hurt us for quite a while, it looks like, based on the lag effect. So still good for us that we know that this shelter is going to keep coming down in these reports, which will make inflation come down, which will be good for the Fed's point of view. Next thing we got, initial jobs claims today came in 187,000. I believe, again, that was the lowest since September of 2022. 207,000 was the estimate. Again, holidays are messing with this a little bit, but the job market is really tight. It looks like employers are trying not to lay people off. So again, the Fed is looking at this and thinking, hey, the job market is super strong. Maybe we don't cut rates too soon. We don't want to, the economy's booming. So that's why we want to keep a close eye on that. But again, that will be one of the last kind of metrics that we see tick upwards, because that's the last thing that happens is, people get laid off before they file for unemployment. So miscellaneous stuff. So first one, Fed Governor Waller, who is a voting member, he spoke the other day, and it didn't have a really good effect on the markets. He said some good stuff as far as inflation looks like it's coming under control, things like that. The basic boilerplate stuff they usually say. But one thing he did say is kind of indicated that he thought maybe cuts wouldn't be till later in the year. Markets didn't like that. We want these rate cuts as soon as possible. So mortgage bonds and treasury yield, things like that, did not react well. We got some negative hit right there. And another negative thing, besides the retail sales and Fed Governor Walter this week, was Yemen and as far as what's going on over there with shipping costs and oil costs and things like that. Anytime we see any sort of unrest over in the Middle East, oil costs tend to go up. And then I think I saw last night that Pakistan did some attacks into Iran against some terrorist organizations. So even that is a little unrest in the Middle East. We just, anything that interrupts the supply of oil is going to possibly affect us in inflation later on. So that's why, the market's kind of react negatively anything over there. So where does that leave us? The average 30-year conventional is up from 6.76 last week. It actually dropped to, I think, 6.69 on Friday after that PPI stuff to 6.89. So not headed the right direction. Again, we had some not such good metrics. That retail sales one was a bad one. So Americans stop spending money, even if it's on credit cards, because the Fed's going to say we're all doing great if we keep spending money like that. But still, under 7, we would like to start getting back closer to that 6.5 number. And then important dates next Friday. Next Friday, we get PCE reports. So again, hopefully that PPI number goes in our favor. We get a good inflation data there. Markets react well. We get some movement in mortgage rates lower. And then the week after that, the Fed will have their meeting and they'll finish it on January 31st, the last day. And that's when they'll just, announce what they're doing. Everybody's expecting that to be a hold. Nothing's going to happen. No cut, no hike. I think it's like a 2% chance they would cut. But really what's important is the press conference, things like that, basically what they say afterwards. And we'll try to read the tea leaves and think, where are they headed, where their comments are kind of heading towards. So hopefully they say nice things, dovish things, not hawkish things. So that's all we got this week. Like, again, kind of went in the wrong direction, but not too bad. We're still holding our ground under 7, so that's great. If anybody needs anything at all, please don't hesitate to reach out. Otherwise, be safe out there. It's kind of crazy winter weather across Oregon, California, everywhere. So everybody be safe. Have a great day, everybody.